All right, welcome back to another video. I'm right here in La Quinta, California. It's a little bit after 8 a.m. I actually woke up really early today to go back to the gym. This is the second day in a row after we came back from the trip to Alabama. And I decided to do some cardio today. Every single day I'm going to be trying something different, get myself back into shape. Like I said before, it's been several months since I've actually gone back to the gym, so I'm feeling a lot better, feeling a lot more productive, going to the office after this and getting some work done, catching up with some clients. So today I just wanted to bring up another serious topic that I think is plaguing a lot of people in today's economy. It's not having an adequate emergency fund. So that's one of the things that I run across a lot with clients that I deal with, especially during tax season, where I have a lot of clients that expose how much money they currently have in their bank. And most of the people that I run into, they usually have anywhere between $100 and $500 in their checking account for the most part. Unless they get paid, then that balance tends to go up, but it gets eaten up immediately with the high cost of expenses that they're incurring. So most people do indeed, I do think, live paycheck to paycheck. Now, these past couple years, that actually has not been the case because a lot of people got a lot of stimulus and a lot of money from the government, especially when they were handing out a lot of credits for the children. If you recall a couple years ago, the government was actually giving out monthly payments to families that had children. So that actually helped out a lot for people to be able to make ends meet. But unfortunately, most people squandered the money away in entertainment and other things that maybe at one point they got pleasure out of it, but at the end of the day, there was nothing to show for it. Maybe a couple pictures, that's about it. I think it's very important for families to understand that in order for you to be able to live more comfortably, you want to be able to build up that emergency fund. Now, what is an adequate emergency fund for most people? Well, you have to take a look at what your monthly expenses are. Now, I'm not talking about the Starbucks runs and all of those trips to McDonald's. I'm talking about your actual living expenses, what it takes for you to be able to operate as a family on a daily basis or on a weekly basis or on a monthly basis. So you have to worry about your utilities, your rent, and if you have a car payment, insurance, and you also have to leave an allowance for other expenses that may arise. For most people, for most families, it's probably going to be anywhere between $5,000 to $8,000 a month here in the United States. I mean, in some places, you might get away with a lot less, especially if you're single. It's very, very expensive anywhere you go nowadays here in the US. Unless you go into a very rural area, most people that I talk to here in this area, they're paying well over $1,500 for any little place. Even if it's a room, a shared room, sometimes it could be $1,000 or more a month. That's why it's very important for you to grab that number, whatever it is monthly, and make sure that you can have minimum 6 months. My recommendation is to build it up over a year. I always tell people if they can do at least 18 months, if you can get up to that goal of 18 months of an emergency fund, then you are actually in the best position possible because we're in very uncertain times. And I do remember back during the financial crisis, there was people that were unemployed for over a year. And the unemployment money was not enough. Here in California, I think what they were paying maximum was a $450 weekly payment, plus I think there was $50 extra that the federal government was subsidizing. So people were getting a maximum of $500 a week, $2,000 a month. It was enough to cover a mortgage because everything was a lot less expensive back then. But even then, you can't count on the government to be able to replicate that again if we run into another financial crisis, because right now we are in very uncertain times and the government isn't in the same position as it was back then. They are running out of options. There's a possibility that if we do run into another situation like that, not only will inflation go up, but the amount of help that the government will give the average American is not going to be the same. So that's why you have to fend for yourself. Having a real good emergency fund is very important. Everything is just so expensive with auto repairs, home repairs, medical bills. Any little trip to the emergency room could cost you thousands of dollars. And even if you have health insurance, you still have to pay a deductible. So even then, you still have to be well prepared, especially if your car breaks down. Right now, any little independent mechanic is over $100 an hour. Unless you have someone that you've known for a very long time, you will be paying over $100 an hour. And if you take your car to the dealership, it's over $200 an hour. I know because I've been there. You're pretty much paying a mortgage payment every time you go into a dealership to do a service for a vehicle. And now, even with the newer vehicles, a lot of people have to take them to the dealerships because they're getting so hard to work on them that not every independent mechanic is willing to test and diagnose these newer vehicles that have a lot of electrical issues. Credit cards, a lot of people use them as lifelines. That's another problem that I run into with people. A lot of my clients, at first glance, you think that they're doing great, but once they open up and you start seeing the massive amount of credit card debt they have, it's just ludicrous. A lot of my clients that I run into, their credit cards are pretty much topped off. And all they're doing is they're paying down the balances a bit and then using them back up again to their limit. And it just continues. And it gets to a point where I've seen many situations over the years where people withdraw money from their retirement to be able to start paying down those credit cards because it just doesn't make sense for them to continue leaving that money there. And this happened a lot back in 2020. I don't know if some of you may recall that the government allowed for people to withdraw money from their retirement and pay taxes on it over a 3-year period. So I had several people that withdrew either close to $100,000 or more, and it was distributed between 3 years. People liquidated their retirement, and these people liquidated the entire thing or the majority of it. And I also have another sector of clients that I've seen where every single year they withdraw several $1,000s from their 401k to be able to make ends meet. Several clients in that situation, that it's guaranteed every single year they have a 1099 from their retirement with anywhere between $10,000 to $15,000 that they withdrew to be able to make ends meet. Those people are in a very bad situation because they won't have the adequate retirement fund. And if a lot of those people don't own a home, they're going to be working until they pass away, which is very sad. Also, another thing that I've seen is that a major cause for family separation and fights is money. Not having the adequate money to be able to make ends meet or to be able to pay out emergencies. That causes a lot of fights between families, especially when you have to go and borrow money from a family member. A lot of people tend to borrow money from their parents, and the parents then get stuck in very bad situations when they try to ask for that money back. Unfortunately, a lot of people cannot pay that money back, or they pay it in very small monthly installments, or they just never pay it back. And so it's very important that if you are a parent and you are lending money to your children, treat it as a gift. And that's actually becoming very common as well. I do get a lot of questions from people about the gift exemption. Every single year it seems to go up $1,000, and it's very common for people to be gifting that on a yearly basis to their children, or even more, so that they can make ends meet as well. Maybe they want to purchase a vehicle, or maybe they want to put a down payment on a property. And that happens a lot. Many, many times have I seen that, where people will gift their children the down payment money for a home. So that's the only way a lot of people are affording property too, is they don't have the money for the down payment, but their parents might, so they end up gifting the money. And that's how a lot of people have become homeowners in their 40s and 50s, from what I've seen. I know obviously there are a lot of people out there that have been able to purchase a home on their own, but that's not the case. Because like I said, this is something that I see, and I have a large pool of clients. So I'm pretty sure that if that's what I'm seeing, then that's what a lot of people around me in this area are seeing. Now, all of this, not having this emergency fund, can also cause a domino effect. Because if you don't have an emergency fund, what's the first thing you do? You put it on a credit card. Credit cards start charging you interest. Interest gets higher and higher as you put more money. And also the monthly payment gets tougher and tougher on all these credit cards, especially if you start juggling them. If you start juggling several credit cards, it gets even more difficult to be able to keep track. Another thing is, what I find is a lot of people, they pay a lot of late fees. So that's why you have to be very, very careful to make sure that if you are making the monthly payments, that you make them on time, at least the minimum monthly payments, so you don't get hit by all these late fees. And then what usually ends up happening is, after that, then they have to start pulling money out of their retirement. Maybe they ask for loans, and then maybe you lose friendships over that, or you lose family members. It just gets worse and worse and worse, and eventually you can run into bankruptcy. And a lot of people think that credit cards, you can't get sued for a credit card balance, but that's actually false. I have seen people get sued for not paying their credit cards. Sometimes they're ignorant. They think that they can just stop paying them, and that eventually it'll just go away. But that's actually a myth, because I personally have seen people come to me and show me the paperwork where it shows that they're getting sued for not paying their credit card debt. And I know that several years ago, the credit card companies, a lot of them were just canceling out the debt. But even then, you still have to pay the taxes on the cancellation, because these credit card companies, they still report this information to the IRS. So either way, you'll get stuck at least paying the taxes on that forgiven debt. So there are ways to be able to claim insolvency on the tax returns. So if you do run into that situation, make sure that you reach out to a qualified accountant that might be able to help you out. Because I know a lot of people have claimed insolvency in the past on their taxes, but that is a little bit more complex. So that's why I recommend that you seek professional help if you decide to go that route. And you know, I'm really amazed that we're in a country that has a lot of opportunity, but yet I have seen that a lot of the times, a lot of people don't take advantage of it. If we are in this country that provides so much opportunity to be able to do it, why not start now? Don't wait. An emergency can happen any day. Your car could be working fine today, and tomorrow the transmission could start slipping. Your AC unit could be pumping cold air today, and tomorrow it'll just stop working out of nowhere, and your thermostat will show over 90 degrees. I know, because I live in the desert and I have seen it firsthand, where all of a sudden an AC system will just stop working out of nowhere, and you will live a very uncomfortable 24 to 48 hours until you can get someone to come out and fix that issue. We have very, very nice weather. Nothing like it was a couple days ago where it was raining and raining and raining. And actually parts of the Salton Sea area over by the Border Patrol checkpoint, if some of you don't know, we are about 2 hours away from the border here. And there's a main highway going towards Mexico. Well, a portion of that highway got flooded. They had a flash flood, and a lot of people got trapped in it. It was very, very bad. And actually the day that JB and I came back from Alabama, we're coming back from New Mexico, we actually just escaped the entire storm, because from what I've heard is that it was right behind us. So I'm really glad that we made it back when we did. Let me go ahead and show you guys something that I just found right now. You could see here, they just built a new gym not too long ago in EOS Fitness. And we're right here in front of Home Depot. And actually, I just saw this truck I parked right next to. I think it's a Toyota Tacoma. And it's a 2008 Toyota Tacoma. It looks like it's salvaged, 125,000 miles, $12,900. What do you think? Salvaged Toyota Tacoma. Is that a good price? I don't know. I'm not very familiar with truck prices. Comment down below, let me know if that's a good price for that truck. I'm gonna go ahead and get to work. I have a lot of things going on this week, but I'm gonna continue to provide you guys as many videos as possible throughout the week. This is something that I've been wanting to do, and I'm gonna go ahead and find time for it now that I'm getting back into the swing of things, getting back into doing my daily exercise routines that I haven't been doing for a while. And it's actually giving me a lot more motivation to be able to continue to provide you guys good content. And in the future, you will see some very interesting videos coming from me. So stay tuned, continue to watch my videos. I have a lot of useful videos out there. We'll see you guys in the next one. You guys take care.